Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. There's a lot of chatter out right now. There's German finance ministers talking about, Jaeger's talking about it's possible to extend a second bailout program, but don't misunderstand what they're saying. It's like you can extend the second bailout program, but then those talks might be misplaced. So don't really believe what I'm saying. But you can extend it, but not saying that it's going to extend is basically what they're saying. It's possible that we can extend the second bailout program for Greece, but don't think that that's what we're going to do necessarily. That's the comments that are coming out right now, and the euro is just kind of whipping around because of it. Anyway, let's try to mute all the noise and just understand that it's a lot of talk right now, and also understand that Cyprus is in Belgium meeting with Merkel. So we have, obviously, when you got, the German and Greek leaders meeting, they're trying to really hash out something at the moment. We'll see how it all goes, but it's going to be might be another one of those very, very volatile days. Anyway, let's figure out where our key levels are, shall we? All right, key support and resistance levels. Oops. Okay, I'm pulling up my pulling up the euro here. All right, so the euro, as I mentioned earlier this morning, so we had stops cleared above 133.50 or whatever. This resistance is going to be very critical. This is going to determine whether I stay short or not, personally. Okay, if we make it above 113.82, obviously, if we get a daily close above 114, you have to be if you get above 114 on a daily basis, a closing basis, I personally will turn into a euro bull or a big dollar bear. Meaning that's what that will turn me for the very near term. And because I need a lot of convincing, and I have been, especially if you've been listening to this webinar ever since the dollar index was in the 80s, you would know this, that I'm a big believer in monetary divergence theory as being a primary driver of dollar strength. And that will continue, because as long as Greece is a problem, the ECB will remain very easy as far as easy money policy goes. And I can guarantee you, this Federal Reserve is hell-bent on not being Japan. Hell-bent on not being Japan. You have to remember that Janet Yellen's previous boss, Ben Bernanke, was an astute study of the Japanese financial crisis. Okay? He studied Japan, and that was the primary basis of him doing massive amounts of quantitative easing to avoid us falling into the same deflationary trap that Japan has fallen into over the last 20 years. This Federal Reserve is hell-bent on not being Japan. That's why this massive amount of quantitative easing has hit the market over the last several years. That is why the Federal Reserve will raise interest rates, because they will not let us turn into Japan. The market will continue to price in a divergent monetary policy between the two central banks. Okay, And it became ever so clear when it became ever so clear when the ECB had hinted at doing quantitative easing. So the dollar will continue to outperform the euro, and I'm a big believer in that. However, we can have temporary setbacks, and if the euro dollar rallies above 114, we'll probably have a temporary setback as we rally back to 115, 116, 117, something like that. All right, and I'll play the dollar to the short side too, if that happens. But I won't do it long because I still believe that the dollar will continue to gain strength. Okay, now the problem, and I'll say it again, if you're, especially if you came in late and you weren't listening when Paul and I were switching over. One of the big risks to the dollar right now is the dollar yen. Okay, and if you don't recall back here, when the dollar went on this massive rally, okay, we went on this massive rally, the dollar yen, when the BOJ did the three-pronged monetary approach with Abe, the three-pronged economic growth, regime, the three-pronged or three-arrow, however you want to look at it, the dollar yen ripped higher. That move higher in the dollar yen was mostly a move in the dollar yen. The dollar reluctantly went higher against the euro, the cable, and everything else. When the dollar yen corrected, so right here you can probably see it here. I'll just let me overlay some symbols here. You'll be able to see this. This is very important information, guys. You might be going, well, what's this have to do with right now? It has everything to do with what's happening right now. Because if you look at the euro dollar and you look at the cable, okay, right here, right? Soon as we started to correct in the dollar yen, maybe it was right here, maybe it was the second one around. As soon as we started correcting the dollar yen, I guess it was right here, because they were kind of reluctantly going higher, and then we started to correct here. I guess it was a little bit later. The pound and the euro actually reversed really hard. The dollar index actually came down pretty aggressively. And you can see here's the euro pound. When we started to correct in the dollar yen, the euro pound really started to, I guess it wasn't here, it was over here. The euro and pound started to go up once we saw that the strength recede from the dollar yen. Then we staged another rally which pushed the euro and the pound down again. And if the dollar yen starts to fall, the euro and the pound could very easily start to move higher as the dollar dollar weakness will make its way through the rest of the market. That's what I'm primarily worried about with the euro and the pound, is if you really see the dollar yen correct, that correction will result in dollar weakness if, and this is the key, if the stock market doesn't correct. Okay, if the stock market does not correct. If the stock market is correcting, okay, if the stock market is correcting and the dollar yen is falling, then I think the other yen pairs will follow, and then the dollar won't necessarily correct against all the other pairs. But because we were screaming higher in the stock market at that time, the yen pairs continued higher basically, or that weakness in the dollar yen here resulted in strength in the euro and the pound as the other yen pairs started to continue higher with equities. So anyway, I'm more concerned that the dollar yen corrects here and it really spurs a correction in the dollar. That's my primary concern. Anyway, let's go into the euro dollar. So right now, today, key resistance comes in at 13, whatever the high is, 1386. High from here is 1379, so 1380 basically. 1380 is critical resistance. All right, I still say we're in a range. And you go, "Ah, Blake, it was so bullish today." I know, but I believe we're still in a range until we break above 114. We're range bound. Now, key support is it's way down here at 112, but I think it'll be even before that. Let's take a look at these hourly moves. I mean, the 786 comes in at 1250. That's probably going to offer us some pretty good support. It's also a 38% retracement. Yeah, so 1250 is going to be really key support today, or I would say where we're supported. So you have to be careful chasing the euro lower here. I mean, we're only what 30 pips away from this support. We'll probably be, this is a 38% retracement, 78% retracement from this move, 38% retracement from this move. So we should probably have some pretty good support here. But if we close anywhere near 112.50, I'm probably going to add to my euro dollar short. That's all there is to it, you know. Um, let's take the cable. God, I got to get going with this analysis. Okay, here's the pound. So the pound is really strong, which you got I don't mind because I'm short the euro pound right now, so this is fine. But being short the pound yen, it makes me a little nervous that the pound dollar is so strong here. So we've got this. We just broke through this resistance, which is interesting. Hold on really fast. Let me stop here for a second. Look at something. Hmm. Let's get rid of that for a sec. Let's get rid of this. I'll extend those out. I don't think we'll need them just yet, but that's okay. We got to figure out where this thing's gonna stop. Ooh, we're at a 50% retracement, like right now, like right here. See it? Cable's hard to read. It really is. One of the other things it could be doing too. Just I'll bear with me for a second. So like, let's say like this. See that? This cable might be done like right now. I'm going to write down 155 as resistance this morning. Okay. We may surpass that because if we do, then I'm going to have to redraw what I've got up there. But 155 might be resistance. We are in a range environment. Okay. Um, all right. So any move now back down to this broken trend line that you see here, this one, this blue one this one right here. Okay, that's going to be pretty well supported. So if we get a move down to 154, that's probably going to be a great buying opportunity. I'm just saying. Okay, let's go to the dollar yen. So obviously the dollar yen in a little bit of trouble. And do you see this? I'm going to have to clean this chart up. This chart is a disaster, isn't it? Okay. Because you need to see where this all came from. That's why it looks like a disaster. But if you take this, okay, high to low, this is 2015, all of 2015 moved. The reason why I shorted the dollar yen last Friday, post non-farm payroll at 125.45 is because we hit the 618 retrace, 161% extension. Obviously, in retrospect, that's been a great move. In hindsight, is always 2020, but in hindsight, this is my entry. You guys remember it seemed a little crazy on Friday at the time, right? On Friday, we were looking at that, and I know a lot of people are like, "Man, you're shorting the dollar yen up here." I'm like, I pretty much traded. If I see 161% extension, just so you guys know, from a Fibonacci standpoint, the 161% extension is actually what's considered the golden ratio. The 618 is a derivative of the golden ratio, but the actual golden ratio is 161% extension. For those of you that are studies of Fibonacci, I've said this before and I'll say it again. Whenever we reach 161% extension, and if I'm closely watching something and I'm expecting a turn around there anyway, I pretty much don't question the fact that I'm going to fade it. All right. It's like one of those, like, I naturally, I'm going to be very prone to reversing an extension that hits 161% extension. All right. Um, so anyway, we hit it, obviously reversed. This move from the BOJ was, pretty lucky, obviously. Now the question is, what happens from here? Because now you have people that are stuck long. Now imagine all the traders that are stuck long the dollar yen. They bought it on Friday, non-farm payroll, super strong. They're long. They're watching this happen yesterday or the day before yesterday, Monday. They're like, oh, it'll bounce. Boom, it didn't bounce. Oh, it's going to hit some of the support. We're going to bounce off this, like yesterday. Everybody's looking at it going, all right, it's finally bounced. It's come down far enough. I'm going to get long. Probably bought some more. Bought some here, bought some more here, expecting a bounce back up here to get out. Then, whoop, now anybody who's long the dollar yen is probably crapping their pants and thinking, God, if we can just get right here, I'm going to get out of everything I own. Think about that. Think about the mindset of the trader who's long. Now, I'm short. You might be short. Some of you might be long. I bought the non-farm payroll. Look really strong, right? We're breaking out because, I chase the market. Whenever the market breaks out, I just buy high and hope I'm going to sell it higher because that's a really crappy strategy. Sorry, that one slipped out. That's a really crappy strategy, but I'm a crappy trader and I really don't know what I'm doing anyway. So I'm just going to buy when it breaks out and I'm going to try to sell it when it goes higher. So I bought it when it broke out. Then it came down and I'm like, well, I'm a really bad trader because I like to buy breakouts and then I like to throw good money after bad and I like to add to losing positions because that's just kind of how I do things. So I bought when it broke out. I'm losing money. I added because I'm already losing money. I might as well lose more money because if I liked it up here, I'm going to like it down here. Now it's cheaper. So I bought more. Cost average lower. I'm expecting a move back up to here. Now this happens, and now I'm praying that we just get back to here. Is that a pretty good summation of how people are trading the dollar yen right now? It is, right? If you think about it. Alan says, "Who wants to know?" Sorry. If I just described how you traded the market, I'm so sorry. Ron says, "Stop talking about me." Carlos, good morning, Blake. You sound like me 5 years ago. Well, I mean, seriously though, I'm outlining how people trade. I mean, as silly as it sounds to some of you here are going, "Holy shit, that's me." You know what I mean? So, I'm just trying. I'm trying to give you guys the, what's happening with the mindset of the market. It's always important to figure out. I think about when I trade. I always tell people this. When I trade, I put myself in the other person's shoes. Sometimes I'm in those shoes too, but I try to think about both sides of the market. How are people that are long, how are they feeling, and why are they feeling the way that they feel? And if you're short, how are you feeling? Like I'm short right now. I'm in the power position. I'm short. I'm adding to my shorts and I'm smiling. And I'm like, there's no way you're going to pry this dollar yen short out of my hands right now. You know what I mean? You're just not. You can't, because I've got a great cost average, and I know it's working against you because now I put myself in your shoes, not your shoes, but the buyer's shoes, and now the buyers are really the ones that are in trouble. So now you have to think about, okay, we've probably formed some sort of low for the day. So now any rally back to 123.75, that's a 38% retracement. This is that price that if we get up here today, what kind of gods are going to be singing up here? The Greek gods, right? Oh, if the dollar yen gets back to 123.75, oh, I might take a short, right? So, if you can get up here to 123.75, that might be a decent place to be on the short side. 123.75. That's going to be key resistance on the way back up. Obviously supports wherever the low is overnight. The low will be 122. Let's just call 122.50. 50. We are not in a bullish range anymore, or a bullish trend anymore. We are now going into a range environment. We have been a bullish trend up until, like I said yesterday, I said we're very close to switching from bullish to bearish. Ooh, that dollar yen's getting creamed again. Nice. Euro yen's getting creamed too. Oh, Amari. Oh, Amari. Oh, Amari. Oh, Amari. Cable's busting a move. It is. Patrick, you're right. And this cable is actually probably a really good short up here. God, do I want to take it? I just don't know if I have the cojones to do it. I can't. But I think it does have resistance here. If you guys want to take a pop shot at the cable, this is probably the place to do it. I'm just saying. All right. Anyway, I got to get moving. Wow, we're running late. Okay, I'm running late, not you. I am. All right, so here's the Swissy. I really just don't like the Swissy right now. Obviously, this is support. Let's redraw this a little bit. Let's do that, all right? 92.30. Let's see this 92.52 is a 618 retracement. I mean, we're just dabbing into lower lows, but we're not really cracking. So and relative strength is diverging. So this is 92.30 is major support, and so resistance right now is this 38% retracement. This is easy. This is easy today. I know you and me and probably no one else right now is trading the Swissy. So it's 92.30. That's support, and then 93.35. Okay. 93.35. And we're in a range. Okay, when I come back, we'll do the Canadian, Kiwi, Aussie, dollar index. We have plenty of time today, by the way, because we have plenty of time because there's we have plenty of time because there's no data coming out. So anyway, we'll come back and we'll finish up. So thanks, guys. Be right back. All right, guys and gals, this is Blake Morrow. You were listening to the Morning Edge webinar. Hey, really quick, those of you that are short the euro pound, just a heads up, I closed my euro pound just now for 56 pips. So let me reiterate that. I have closed my euro pound short for 56 pips. Now, can somebody answer me why I closed the euro pound short for 56 pips? There's actually two reasons. Can somebody give me two reasons why I just closed my euro pound short? Kelly, Great answer. Patricia, great answer. Carlos, great answer. Ron, David, great answer. For those of you that said that the pound is at resistance, you guys are correct. Because the cable is at resistance, I wanted to cover up my cable longs. Now I am long the pound New Zealand, so just keep that in mind. But that's more of being short the New Zealand than long the pound. But because the cable's at 155 and I think it's really key resistance, I wanted to close out my pound long, which was the euro pound. I'm short the pound yen too, so I'm in essence I'm basically hedged the cable right now because I'm long the pound New Zealand, short the pound yen. Um, but also the other reason is real simple on the euro pound. What are we close to forming here? We're close to forming what's called a double top, right? So if we break this uh, um, support here, which is at 72.65, we're at 72.80, whatever. If we break below here, that will put the double top in play. Okay, so automatically we do this, right? And then, I'll play it to the short side. But if I cover here and I have to reshort here, do I really leave a whole lot on the off the table? No, I don't. If I get out here and I have to reshort right here, I might leave 25 pips on the table. Who cares? It'd be better obviously if it could get all the way down here. The thing I'm worried about though is I'm worried about the cable hitting resistance. I'm more worried about the dollar actually staging a bounce than anything. Okay. So anyway, um, so so I'm out of the euro pound. So for those of you that took the trade, if you're still in it, just realize I won't be updating it as much now that I'm out. I mean, obviously, if you guys ask, then I will. But all right, let's go over to the U.S. dollar Canadian. We need to get this analysis done. So this is my analysis from yesterday. So we have double top, plays down to the 618. Okay. Now, this is a very obvious double top too. It was very obvious highs, neckline, breakage. Problem is we stopped at the 50% retracement. And you can see yesterday I'm like, man, if this dollar Canadian bounces, I drew this out. I said if it bounces back to 123.75, it's a great short, right? I drew it in blue. You can see I drew the arrow. It worked out pretty much perfectly, I would say, right? I mean, keep in mind, I drew this yesterday before it all happened. So let's just delete it because if you were listening in yesterday, that's what happened. Okay. Problem that I see right now is that we're at the 50% retracement and we're holding. Now, if when everybody's short, okay, what happens here? If everybody's short, everybody goes, man, I'm short in the dollar Canadian. It's double top. It's going down to here. But I see a 50% retracement, so I'm going to put in my limit to buy right here. And then the next guy goes, well, all those smart guys are trading like this, and they're going to put their limit here. I'm going to put my limit here because I want to get out in front of them. Then that one real smart trader gal, she goes, yeah, well, those guys think they're really smart putting their limits here and here, so I'm going to put my limit here. And then somebody else goes, well, that smart trader chick, she's smarter than those guys. She's going to put her limit above those guys' limits. I'm going to put my limit up here. And then so what happens is you get limit orders stacked up as you approach a fib level, and it goes, and it starts bouncing from the 50% retracement. I'm more worried right now that the dollar is going to stage a rally against the euro. It's going to stage a rally against the cable, which could in turn stage a rally against the Canadian too. So you got to be really, really careful here. I'm not saying it's done going down. I would just, and I have no Canadian exposure. I have no Canadian exposure. And Daryl says, "What about us dummies?" Oh, well, if you're a dummy, you're probably you just put in a straddle for the dollar Canadian. That's what you did, Daryl. You straddled it. I'm just kidding. I'm just joking. All right. So anyway, so the dollar Canadian, it really has key support. If we get down to 160 or 121.60, I'm buying. Probably with I'll probably buy with both hands if we get down here. Okay. But I'm a little concerned that because the euro looks like it's turning, I'm concerned that the dollar Canadian is going to turn too. So um, let's figure out, and we don't have any Canadian data today either, I don't think. Let me double check that. I don't think we do. No, but we do have crude oil inventories, which, I mean, crude's ripping right now. So, I mean, that could continue further. Okay, so here's where the Canadian turns, like people who are short are going to scramble a little bit. If you get above 122.70, obviously support's going to be down here at 121.66. And if we get down there, I'm buying. So just so you all know. Okay. We get down there, I'm a buyer. 122.70 is resistance. We are in a range, but we're bearish at the moment. But really, if you just kind of zoom out, we're in a range. Okay. It's just bearish at the moment, but we are in a range. Okay. But wheat. Kiwi. So the Kiwi rallied to 72 cents. We got above 72 on that spike up thanks to the euro dollar. Just so you guys know, I am short the Kiwi dollar at 90. Where am I short? I'm at 92, 71.92. I already started a nibble short. I did that 30, 40, 50, an hour and 10 minutes ago. Okay. I already started to get on the short side of the Kiwi. If you guys are in the chat room, the people in the chat room already know that. I started a nibble on the Kiwi because my 2 cents is this. If the Kiwi drops from here, so you can see the resistance it hit, right? I'll have to just hit this resistance right there. Okay. Like that. If the Kiwi drops from here and we get to, like, let's just call it 71.50 or 71.30 before the RBA, I'm going to hang on to it. It's a small position. It's not huge, but I'm already getting on the short side. Because if I can get myself up 50 or 60 pips ahead of the RBNZ, I'll hold it through the RBNZ. Okay? Just to let you all know. So resistance right now is, and this is enough just to squeeze out shorts. See that? See those wicks? So resistance is at 72.30. Now, chances are the RBNZ is not going to cut rates today. Probably what they will do is prepare the market for rate cuts. Okay, but today's high is resistance, because if we break that, we're gonna do a continued squeeze. This is going to really start to squeeze, I would think. Do you guys see how that's going to squeeze? You see that? We break above those highs and we are going much higher. But if we stop here, we have potential revisiting those lows. Very critical juncture for the Kiwi dollar right now. And if you short it right at this moment, you're only a few pips away from where I'm short. Okay. So where's support today? Let's figure that out. Probably right here, I would think. So right around here. Let's say roughly 71.50. Okay. We are still in a bearish trend. Guys, we are not out of this bearish trend. We will be out of this bearish trend if we break above today's highs. Okay. You can see how everything else is going back to a range environment, so the Kiwi could very easily go back into a range environment too. I may have got out of that euro pound too early, but that's okay. I don't even really care at the moment. I took a good profit from that. So, Aussie, US dollar. So the Aussie, very whippy. Look at this thing. That 78% retracement, that held. I mean, I know we spiked above it, but really that held. So that's key resistance now, 77.85. We are still in a range. And support, I mean, that's really support, 77.25. I know we're right there, but I'm gonna write down support as 77 because you can see this is like a right through here. So you got 77 and a quarter and then 77.10. Really a couple levels of support through here. 0.7710, 0.7725. Okay. And let's take a look at the dollar index. Here's the Dixie. So very interesting here. Hold on, let me go out to an hourly chart really quick. Okay, so do you guys see how we lower low? See relative strength diverging. Do you see it? It's diverging big time as we hit lower low, lower low, lower low. Relative strength is diverging. So what's this mean? What's it all mean? What that means is if we break this high, 95.05, we're ripping back in the dollar index. That's what that means. If we break through this high, $95.05, that's key resistance right now. If we continue to fall with divergent relative strength, then 94.05 is probably the place to get long. Okay. All right. Let's go to the looks like the pound's pulling back a little bit. Let's go over to the peso. So the US dollar Mexican peso took out support. It took out that trendline support. Okay. So it took out that trendline support from yesterday. Let's take a look at the retracement. So we're basically at a 38% retracement, which still is a very, very shallow retracement. Actually, today's lows are pretty important. Spike, spike, spike. But any rally now to 1560 is gonna, you're gonna find sellers now. So 1542, 1560. 1542, 1560. We've gone from being bullish back into a range because of the breakdown of this trend line. Okay. US dollar, Norwegian krona. I think Norway had some inflation data that came out. So check this out. We're really, really probing here. But if the euro dollar rolls over, this is going to end up being a false breakdown. So be careful. Just be careful with the Norwegian krona. We'll revisit that probably tomorrow. Angela Merkel says, where there's a will, there's a way. Oh. So she's talking very positively about the Greece situation right now. And the euro's bidding up on that news or on that headline. The stock market isn't really doing much. Okay. Let's actually go really quick, take a look at the E-mini futures. Huh. Hold on. We have a inverted head and shoulder pattern here. That means we're probably going back to 2100, right? That's what it looks like to me. Let's remove that. This is an hourly. I mean, you can see in the hourly we've been trending lower now for the last few days. I mean, I know we're in a really strong uptrend, like generally speaking, we're in a strong uptrend. But the hourly has been downtrending, for the majority of this chart, which is, a couple weeks here. So this inverted head and shoulder pattern looks like it could play out back to yeah, maybe back to 2100, which will just retest this trend line. So I'm going to write that down. ES's, ES 2100. Support is going to be right here at 2080. Okay. All right, guys, there's your bias chart. I'm going to leave that up for you. And, oh, I got to stretch. Man, wow. I'm a little